BlackRock, the world's largest asset management company, now owns approximately 3% of all the Bitcoins in existence. Their Bitcoin Exchange-Traded Fund, ETF, launched just 11 months ago, and it has already surpassed their iconic gold ETF in size. In addition to this, the past 11 months have witnessed the launch of 11 more Bitcoin-only ETFs in the US, featuring prominent names like Fidelity, Grayscale, and Bitwise. Together, these ETFs now hold approximately 6% of the total Bitcoin supply, valued at around $100 to $112 billion. That's crazy, right? I can bet, even BlackRock's CEO Larry Fink wouldn't have thought he would receive this level of love for Bitcoins when launching this ETF. BlackRock's Bitcoin ETF has become the fastest-growing ETF to date. To put it into perspective, BlackRock's next best ETF took 5 years to reach $50 billion in assets. The Bitcoin ETF has achieved this milestone in just 11 months. With an expense ratio of 0.25%, this ETF is now generating at least $125 million annually for BlackRock. What's more important to note here is despite Bitcoin's price appreciation, the flow of money into these ETFs would still amount to around $70 to $80 billion, which signals a massive institutional investment in Bitcoin. Here's why this is important. 1. Institutional money flowing. The influx of funds is largely driven by institutional investors and corporate treasury money, rather than just retail investors. Corporate treasuries refer to the funds that large companies hold in reserve. If these entities are putting money into Bitcoin ETFs at a high rate, it indicates a significant shift in how institutions are viewing Bitcoin. Second, impact on global markets. Corporate treasury money traditionally supports global equity markets, stocks, bonds, etc. The fact that Bitcoin was not supported by this kind of institutional money until now is a major reason why it struggled to gain mainstream acceptance. However, the shift in the last 11 months, with institutions backing Bitcoin more robustly, is a game-changing event. Third, massive shift in Bitcoin's position. Bitcoin has historically lacked this institutional backing, which kept it somewhat volatile and speculative. The recent influx of corporate treasury money has added a layer of stability and legitimacy to Bitcoin, further integrating it into the financial mainstream. The massive influx of institutional money into Bitcoin ETFs, led by top asset managers like BlackRock, Fidelity, and Grayscale, marks Bitcoin's shift from a speculative asset to a stable and integral part of global financial markets. And finally, I'll leave you with this fact that not too long ago, Larry Fink used to call Bitcoin a scam and a tool for global money laundering. Today, he is the biggest sponsor of that very asset class, owning 3% of it via his fund. And now, with Trump in the game, the conviction and the ETF and institutional inflows to buy Bitcoin will only accelerate.